Reference Guide to Regulatory Compliance, page 806, BSA AML section. In the section 12 of BSA AML regarding high-risk customers, not sure, well, absolutely sure that this is not banking regulation, because it's referring to non-bank financial institutions. Is enforced by the 2010 Examination Manual and some OCC guidance. AL 2004-7, maybe a letter. And we're talking more or less about like casinos, securities and commodities, MSBs, insurance companies, pawnbrokers, jewelry stores, metals and stone dealers. Compliance requirements for NBFIs. Banks with NBFI accounts are required to develop policies and procedures to identify NBFI relationships, assess money laundering risks of NBFI relationships, conduct ongoing due diligence on the NBFI relationship, and ensure that NBFI accounts are included in the bank's SAR monitoring and reporting systems. Conduct due diligence. Consider I. Products or services offered by the NBFI, locations and markets served by the NBFI, 3. Purpose of the account, and 4. Anticipated account activity. C. MSB compliance, which is your money service businesses. Roman numeral I. MSBs are subject to BSA and must register with FinCEN. 2. If required, MSBs must be licensed in their state. And Roman numeral 3. Risk factors for MSBs include A. FinCEN registration and state licenses. B. Written AML BSA program and designation of BSA officer name and contact information. C. Established banking relationship and or account activity consistent with expectations. D. Established business with an operating history. E. Whether the MSB is a principal or one or a few agents, or is acting as an agent for one principal. F. The MSB provides services only to local residents. G. The MSB's customers conduct routine transactions in low dollar amounts. H. The actual low-risk transaction activity for the MSB's business operations is consistent with the information obtained by the bank at account opening. And I. Money transmitting activities are limited to domestic entities or are limited to lower dollar amounts. Roman numeral 4. Enhanced due diligence on MSBs should include review of their BSA AML program. B is the results of the MSB's independent testing of the BSA AML program. C. The written procedures for the operations of the MSB. D. An on-site visit. E. The list of agents including locations within or outside of the United States that will be receiving services directly or indirectly with the MSB account. And F. The written agent management and termination practices for the MSB and the employee screening practices for the MSB. Professional service providers. Section B. Third party that acts as an intermediary between the bank and the client, such as a lawyer, accountant, or investment broker. 2. These accounts may be more vulnerable to money laundering. 4. Banks must adequately assess the risk at account opening and monitor for suspicious activity. C. Non-governmental organizations, NGOs, and charities. 1. NGOs are private non-profit organizations that pursue activities intended to serve the public good. 2. Because the flow of funds into and out of an NGO may be complex, they can be susceptible to abuse by money launderers and terrorists. 3. In addition to collecting CIP information on the NGO, due diligence should also consider A. Purpose and objectives of their stated activities. B. Geography served, including headquarters and operational areas. C. Organizational structure. D. Donor and volunteer base. E. Funding and disbursement criteria, including basic beneficiary information. And F. Record-keeping requirements. G. Affiliation with other NGOs, governments or groups. H. NGOs, internal controls and audits. 4. For high-risk accounts, the bank should include stringent documentation and verification. Transaction monitoring should be established. 5. Enhanced due diligence should include A. Evaluating the principles. B. Obtaining and reviewing financial statements and audits. And C. Verifying the source of and use of funds. D. Evaluating large contributions or grantors to the NGO. And E. Conducting reference checks. Before I continue, what I said at the beginning of this recording was incorrect. These are the bank's requirements when the bank is holding accounts for non-bank financial institutions, including your casinos and MSBs, insurance companies, and securities dealers, etc. So this applies to banks. they have their own influencing regulation. Cash-intensive businesses. Cash-intensive business, this is subsection D. 1. Cash-intensive businesses potentially susceptible to money laundering, terrorist financing include convenience stores, restaurants, retail stores, liquor stores, cigarette distributors, privately owned ATMs, vending machine operators, parking garages. Banks should conduct a risk assessment that considers A. Account purpose, B. Volume, frequency, and nature of currency transactions, C. Customer history, for example, length of relationship in CTR and SAR filings, D. Primary business activity, products and services offered, E. Business structure, F. Geographic locations and jurisdictions of operations, G. Availability of information, cooperation of the business providing information. 3. For high-risk customers, the bank should conduct on-site visits, management, interviews, and reviews of transactional activity. E. Non-resident aliens and foreign individuals. 1. Foreign individuals include resident aliens and non-resident aliens, NRA. A bank's CIP program must include the identification requirements for NRAs and foreign individuals. 3. Banks must have policies and procedures that provide for sound due diligence and verification practices, risk assessments, and ongoing monitoring of NRA accounts. 4. NRA account risk factors include A. Account holder's home country, B. Types of products and services used, C. Forms of identification available, D. Source of wealth and funds, E. Unusual account activity. Subsection F. Politically exposed persons, PEEP. A PEEP is a current or former senior foreign political figure and that person's immediate family and close associates. 2. A senior foreign political figure includes A. A senior officer in an executive, legislation, administrative, military, or judicial branches of a foreign government. B. A senior official of a major foreign political party. C. A senior executive of a foreign government-owned corporation. D. Any corporation, business, or other entity that has been formed by or for the benefit of a senior foreign political figure. 3. Immediate family includes parents, siblings, spouse, children, in-laws. 4. Close associate is someone who widely or publicly known to maintain an unusually close relationship with a senior foreign political figure. Including someone who conducts financial transactions on behalf of a political figure. 5. Must establish risk-based controls and procedures to identify PEEPs. Banks that have PEEP accounts must conduct risk-based scrutiny of their accounts. 7. Risk-based due diligence of a PEEP may include A. Identifying the account holder and beneficial owner, B. Obtaining information directly from the individual regarding possible PEEP status, C. Identifying the country of residence, D. Obtaining employment information, E. Checking references, F. Identifying the source of wealth, G. Obtaining information on immediate family members or close associates that have authority over the account, H. Determining the purpose of the account and the anticipated volume and nature of the account activity, I. Making reasonable effort to review public sources of information. G. Embassy and foreign consulate accounts. 1. Obtaining comprehensive due diligence on embassy and foreign consulate account relationships commensurate with the risk presented. Risk factors for embassy and foreign consulate accounts include A. Accounts from high-risk countries, B. Accounts with substantial currency transactions, C. Account activity inconsistent with this purpose, D. Accounts that directly fund personal expenses of foreign nationals, and E. Official embassy business conducted through personal accounts. 3. Banks should fully understand the purpose of the account as well as the expected volume and nature of the account activity. And 4. Banks should establish monitoring policies and procedures. Now we're in section 13, records retention. Subpart A, extension of credit in excess of $10,000, non-real estate, original microfilm, film, or other reproductions for 5 years. Subsection B, international transactions in excess of $10,000, non-real estate, original microfilm, or other reproduction 5 years. 10. 1. Original microfilm, film, or other reproduction 5 years, separate from backup withholding requirements. Separate is 2. D. Subsection D. Signature cards, original microfilm or other reproduction 5 years. Subsection E, account statement, original microfilm or other reproduction 5 years. F, checks in excess of $100, original microfilm or other reproduction 5 years. Subsection G, records to reconstruct command account, original microfilm or other reproduction 5 years. H, certificates of deposit and records on the purchasers, retained for original microfilm or other production for 5 years. Subsection I, purchases of monetary instruments at least $3,000, 5 years. Subsection J, documentation on foreign shell banks, 5 years after the termination of the account relationship. Subsection K, records of all extensions of credit in excess of $10,000. 1, does not include credit secured by real property. 2, record must include A, borrower's name and address, B, credit amount, C, purpose of credit, D, date of credit, and be maintained for 5 years. Subsection L, wire transfer direct deposits must maintain for 5 years all deposit slips or credit tickets for transactions in excess of $100. I didn't know you needed to keep the slips for direct wire transfer or direct deposits. Different. I thought you just need to be able to search, like, the information on the travel roll. I didn't know you needed deposit slips. It's weird. 5 years. Section 14, enforcement, which means we're nearing the end of the BSA requirements. Subsection A, civil penalties.